वेटर
सर और ऑनलाइन मेन्यू कार्ड में से क्या खाएंगे आप?
डोसा खाएंगे.
कौन सा डोसा चाहिए? कट डोसा, मसाला डोसा, मैसूर डोसा, रवा डोसा, चीज डोसा, आलू डोसा, कांदा डोसा, स्प्रिंग डोसा, टॉपी डोसा, स्पंज डोसा, पैर
बस 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 सादा डोसा दो.
सादा डोसा नहीं है सर. Hey folks, see Rachana Ranade here and I welcome you all to a very interesting video which is about top 5 things that you have to consider while buying a bond. Now you can imagine whenever you go to a restaurant, there are so many options available just to buy 100 rupees dosa. So if it comes to investing 1 lakh or maybe 10 lakh rupees, and if we have so many options from where you have to choose your perfect bond, the bond that fits you, then it's so difficult to choose that bond. So in this video, we are going to talk about number 1, why to invest in bonds. Number 2, what could be the right time to invest in bonds. And number 3, top 5 things that you have to consider while choosing a bond that fits your investment requirements. Now, many times we YouTubers say that don't forget to watch the video till the end. And you're like, what is going to happen at the end? At the end of the video, I'm going to talk about the website thefixedincome.com, which I use to invest my own money in bonds. Very important. I'm also going to talk about the process that I use to filter out, to shortlist bonds in which I plan to invest. And number 3, I'm also going to disclose one bond in which I have recently invested in. Now let's try and understand, why do you want to invest in bonds? What is the reason for investing in bonds? We'll go one by one. The very first one is diversification. Everyone knows that the basic saying is that don't put your eggs in one basket. Don't put all your eggs in one basket. So just as an example, even if you feel that yes, I know anything and everything about stock market, does it mean that 100% of your money, of your savings should go into stock market? Answer is no. A chunk of that can go in stock market and balance should go into diversified investment avenues. And one of the investment avenue could be bonds. So very basic point, why invest in bonds is diversification. Second reason why you should invest in bonds, because bonds offer a stable and a predictable cash stream of income. Means what? In stock market, I don't know whether the company will declare dividend or not. In stock market investment, I'm not sure whether the price will go up or down. Okay, but if I'm talking about investment in bonds, I know that I'm going to get X percentage of interest every quarter or every half year or every year, whatever is the scenario. So I know that yes, this is going to be the income stream, or this is going to be the interest that I'm going to get in a specific time frame. So predictability element is amazing in case of bonds. Number 3, why invest in bonds? To preserve capital. Mark my words, not to grow or take your capital to the next level, but it's mainly to preserve your capital. Why? If you're talking about investment in equity, can your investment amount double? Yes. Can it be a multi-bagger return sometimes over a period of 10 years, 20 years? Yes. But if you're investing in bonds, even for 10 years, you cannot get a multi-bagger return as such. Okay, why? Because the interest is fixed. What will you get? 8%, 10%, 12%. What more than that? So main focus is investment in bonds is more from the perspective of preservation of capital rather than growing your capital to the next level. I hope this point is also clear. One small word of caution I'll tell you. It is said that whenever you do a goal management, okay, assume that you are investing for your child's education and your goal is for 15 years. Ideally, it is said in portfolio management that as and how your goal becomes closer and closer. So just in case, assume that you started today, year 0, and this is your child's education goal 15 years. Somewhere near 13th or 14th year, you should be parking your funds in debt. Why? Because you want more of capital preservation at that phase rather than capital appreciation at that phase. I hope this third point is also very clear, very important point. And the last one is tax advantage, where there will be some bonds which can offer you tax-free income. There are certain bonds, so whenever you invest in bonds, check whether interest is tax-free or not. Now let's try and understand, is this the right time to invest in bonds? In Marathi we call it as हीच ती वेळ हाच तो क्षण. So if that be so, then you have to consider few points on whether I should invest right now or not. Very first point could be rally over the last 1.5 years. Now I'm sure everyone knows about this V-shaped recovery. We have been continuously increasing since March 2020 from very lower levels to, as I'm shooting the video, Nifty has already crossed 18,000. So if you feel that enough of this rally, there'll be some profit booking. Okay, I'm not telling you my opinion. I'm saying that if you feel that there might be some profit booking in the market, then it could be a wise decision to book your profits in equity and park this money in bonds, in debt, or in fixed income securities. Number one. Number two, if you are really close to achievement of your goals, remember in the previous section I said that assume that you had an education, child's education goal when it was a 15 years goal, and right now you're in the 13th or the 14th year. Then it is again a smart decision to shift your equity investments to your debt investments. That way you're secure about what? Your capital. Your interest is not growth of capital, it's about what? Security of capital, right? That could be one reason why you should be shifting from equity to debt. Then it would be a right time to buy bonds now. And the third one is change in risk profile. Now, what could be an example of change in risk profile? For that, have a look at few risk profiles. Number one, assume that it's a conservative risk profile wherein 60% of your portfolio should be parked in cash and fixed income and 40% should be parked in equity. And assume that your risk profile is shifted from conservative to defensive. You might be like, Achanak, what happened? Why did my category shift from conservative to defensive? Assume that your marriage is finalized, and then the moment this event happens in your life, then you want to please the other person, at least in the initial few years. Okay, baad mein, okay, anyways, experience. But in the initial few years, this investment is very important because this investment is going to pay off returns for lifetime, right? So that is the reason why you want more and more income in the initial few years. You would not want to park more and more funds in equity, right? So in that case, what is the difference between conservative and defensive type of model portfolio? You can see that 60% in cash and fixed income versus 73% in cash and fixed income. So that balance of 13%, you would want to park more in bonds. And if that be so, that could also be one of the reasons why you would want to invest in bonds now. Now let's understand the top 5 things that you have to consider while choosing or finalizing a bond for investment. Number 1, you have to check the coupon rate, but coupon rate is not the most reliable rate. What you have to check is YTM, that's nothing but yield to maturity. Second thing that you have to check is what is the minimum amount of investment required. So there could be some bonds wherein minimum amount investment required is 10 lakhs. Some bonds might offer like something like 1 lakhs. So what is your investment appetite? Based on that, you will have to check what is the investment amount required. Third, very important, rating. What is the rating of the bond? So I'm sure you might be aware about rating agencies like CRISIL, ICRA, CARE. All these rating agencies would rate a bond. So higher the rating, better it is for an investor. More secure does an investor feel if the rating agencies have given a good rating. Next one can be the time. Time means what? If you remember, I told you that abhi shadi fix hua hai. Then you need what? Quarterly payment. You need semi-annual payment. Or there could be a person who feels I don't want quarterly or semi-annual. I'm fine even if the interest payment is annual. So that is nothing but IP frequency. IP frequency, interest payment frequency. One more point in the same one was the tenure. Tenure is what? How much time is there for the maturity of the bond. There could be bonds like 5 years tenure, 10 years tenure. Very important, there could also be perpetual bonds. What do you mean by perpetual? Perpetuity, it will go on and on and on forever. There's no maturity as such. So be careful with perpetual bonds, right? And the last one can be like other parameters, like what? It could be taxation of bonds, whether it's a tax-free interest will be tax-free or taxable. It could be whether the bond is secured or unsecured, very important. Next, you can check what is the optionality of the bond, whether it's a callable bond, whether it's a puttable bond. And if you're not aware about what is callable, puttable, then we do have a separate course on futures and options wherein you can understand all these concepts very nicely. And the last one is what is the issuer profile? In simple words, who is issuing the bond? Is it a bank who is issuing the bond, or is it a PSU which is issuing the bond, or what? But I'm sure when you checked out all these points, you said, okay, theoretically I've understood this, but how do I practically filter out all these parameters while investing in a bond? All these practical aspects we are going to check out in the next part of the video. Now let's talk about the website thefixedincome.com, which I use to park my money in bonds. So again, one disclaimer for the entire section of the video. My risk appetite, your risk appetite might be different. So just because I have invested in a specific bond does not mean that you have to blindly go and invest in that bond. What is important? You have to understand what parameters I'm using to shortlist the bond. Check what parameters you are going to use, check what suits your risk appetite, your investment style, and then finalize the bond that you would wish to invest if you want to, right? So first, what would you do? Go to the website thefixedincome.com. As usual, this is not my login, so don't try to see which other bond she has invested in. This is just a dummy account, okay? So what do? I go to explore all bonds. The moment I go here, you can see all these bonds, and this is just page 1. Then you have page 2, page 3, so many bonds to explore from. So out of all these bonds that are available, which one should I choose? So for that, the top 5 parameters that we discussed in the immediate previous section of the video. Now let's try and apply that knowledge practically. So as a normal retail individual investor, what is the first parameter? Paisa kitna milega? Where would be the rate highest? But which rate do you have to check? Do you have to check the coupon rate or do you have to check YTM? Ideally, you have to check YTM. That's the yield to maturity. If you don't know what is YTM, that's the I button. You can click on that and then check out the video on Y2M at a later stage. As of now, just remember that you have to check yields. Okay. So what have I done? I've gone to explore bonds and then click on this button again, which is about yields. In simple words, in descending order, it has given me which are the bonds that give me the highest yield to the lowest yield. So highest to lowest is this manner, is the manner in which it is displayed now. So let's talk about top 8 bonds that I'm going to filter out based on what? Based on yields. So we have Muthoot, Nuvoco, Hinduja, the South Indian Bank, Jammu Kashmir, UP Power. All these are top 8 bonds with highest yield. Number 1. Number 2, okay, highest is Muthoot, agreed. But then second, I have to check what is the minimum investment amount required. Assume that I have only 1 lakh to invest. Then do these investments suit me? No. All these you can see 10 lakh, 10 lakh, 10 lakh, 10 lakh. Even if you go to all these 10 lakh, 10 lakh, 10 lakh, minimum investment amount is 10 lakh. Would there be some other bonds with minimum investment of 1 lakh? Yes, explore it out. Okay. For me, am I fine with investing 10 lakhs? So answer is yes. So I'm fine with 10 lakh minimum investment. So second point is ticked out. Now we want to see the rating of all these bonds. So let's start by filtering all these bonds. So first one, we are going to check Muthoot. Muthoot has an A- rating. Going to Nuvoco, it has a AA- rating. If you check out Hinduja, Hinduja has AA- and South Indian Bank has an A+ rating. Now out of all these 4, I hope base ratings are absolutely clear for all these 4. Let's move on ahead. Next one is Jammu and Kashmir. Jammu and Kashmir has A+ rating and this is not for CRISIL. So let's ignore this one right now. Let's move ahead with all the other 3, which is UP Power. All UP Power have A+ credit rating. Now out of all these, if you check, Muthoot has an A- rating, which is the lowest credit rating as compared to all other bonds that we discussed right now, be it Nuvoco, Hinduja, South Indian, or whatever, all these 4. So I hope you have understood that based on rating, I'm going to cancel out the first one. Now we are going to check the payment pattern, which is the IP frequency. IP frequency is interest payout frequency. If you see for the second and third one, which are Nuvoco and Hinduja, the payment is annual. I don't want that. Now if you see South Indian Bank, it's semi-annual and I'm okay with a semi-annual payout. Now going ahead with Jammu and Kashmir, again it's annual. Not going to go ahead with that. If we go ahead with UP Power, you can see that the IP frequency is quarterly. Second one, third one, same. So for UP Power, all 3, if you can see, for all 3 it is quarterly and I'm absolutely fine with that, right? So which 2 have I shortlisted? Either South Indian Bank or UP Power based on frequency. Next one is what is the tenure? Okay, I was actually checking out for a short term goal. Okay, somewhere around 2 years, 3 years should be more than enough for me. I don't want to go for a longer term, 10 years bond, nothing like that. Now where can you see the tenure? Here, South Indian Bank tenure is 2 years, 8 months. I'll be done. I'll get my money principal amount within 3 years. So good one for me. What about UP Power? Here you can see tenure is 5 years, tenure is 5 years and tenure is 4 years, 3 months. Okay. So 3 years, 4 years, if you're okay with that. So with this, for my investment need, I have some investment goal to be met in either 3 or 4 years. I'm not going to disclose what is my goal, but somewhere around 3 to 4 years. So with this is gone, this is gone. So either I have that 4 year 3 months wala, or it is 2 years 8 months, which is almost 3 years. Okay, so I hope this tenure wala point is also absolutely clear. Now if I'm talking about other parameters, if you remember, there was something like whether it's a secured bond or an unsecured bond. So for that, it's not given on the face here. So what do I have to do? I have to click on view details. Okay, once I click on view details, you'll find a very important sheet which is known as a term sheet. Click on this term sheet. Once you click on this, tada, the very first thing that you see is this is unsecured. So am I comfortable to? No, I don't want to go ahead with unsecured. So I close this. I hope at least UP Power wala is secured. Otherwise, I'll have to go back to the shortlisting criteria, right? So now what I do is, where did it go? Gone. Wait. So let me just, that will be a quick revision also. Again, explore all bonds, then yields, and so let me just click on yields again. So sort, and yes, this was the one. If you can recall, here I click view details again. Once I click on view details, where do you have to click? On term sheet. Once you click on term sheet, what can you see here is it is a secured bond, and I'm happy. Fair enough. This one does fit into all my investment criteria. Again, I'm mentioning, just because it fits into my investment criteria, does it fit into yours? No. But at least you have understood how to filter, how to shortlist, what are the various parameters based on which I take my final decision of investment. Well, I hope you have understood how to filter, how to shortlist a bond which fits your investment style, which fits your risk appetite. If you have, don't forget to share this video with your friends, relatives, and till then, study more, research more. Take care. Jai Hind and bye-bye.